Jason Katz joins me now, though. That's great to see Jason. Okay, sir, how high does the S&P go by the end of next year? It's flirting with 7,000 now.
So, Ashley, I don't want to be too Pollyannish in my views, but I can't help myself.
Okay.
I think 7,300 by mid next year, and I think 7,700 by the end of next year. And if you think about what's at play here, you have a dovish Fed chair coming in, and you're going to get at least 2 rate cuts. You're going to have tax cuts that are forthcoming. You have inflation that's likely to moderate. You have abating fears about tariffs at play, not to mention a business-friendly environment where deregulation is very likely to kick in. You put this all together, S&P earnings, I'd be surprised if they don't grow more than 10%. If they do grow 10%, we're looking at an S&P that trades higher. Maybe not a straight path, but up nonetheless.
Why do you think, Jason, commodities are positioned for a more prominent role next year?
You think about, Ashley, this year, all the focus has been on gold and it's been on silver in turn, but left in the dust has been copper, aluminum, agricultural products, and there's been a huge supply-demand imbalance there. Not to mention, we have heightened geopolitical risks that are simply not going away. And what we're really bullish on is oil and energy-related shares in particular. You're looking at the grossest underinvestment in energy infrastructure outside of the AI data center complex than we've seen in decades. So I think the energy complex has been left in the dust and will be a great diversifier in 2026.
So you see the price of oil perhaps going up next year?
I think 67 at a minimum is what we're looking at for the price of that commodity.
Okay. Very good. We'll have to leave it there, but great stuff as always, Jason Katz. Always appreciate it.
Thanks, Ash.